So how many entrepreneurs here? And how many of you are looking for funding? Oh, that's... Okay, you guys are in a spot. Hi, thank you so much for being here. So let me start with the first question, and everyone should answer this one, is what are the hot sectors for this year? We'll start with you, Pratik.
Hot sectors. I think Atulya is the right person to answer this. They make the sector hot by investing in it.
Oh my God.
I hear noise about like fintech and SaaS and blockchain, I guess. And consumer, offline consumer, of course.
Atulya, since you're the expert apparently.
No, I think all sectors are hot, to be honest. I think we are just getting started in the tech ecosystem. I think we have a pretty large team covering all sectors from what one would call old economy sectors like logistics and things like that to blockchain and IoT and things like that. So, and we are equally excited about all of them, right? And there's a lot of opportunity in each. So I wouldn't, we don't really, we think there's opportunity across. Okay. Yeah.
Nikhil?
I think we're a smaller fund, so we have to definitely be a bit more focused. So we divided into two parts. One is domestic focused and one is global. So for domestic, mostly looking at fintech, health tech, and agri-tech. Nice. So those three sectors, those are the ones I want to make investment in this year. Awesome. And globally, I think global SaaS is definitely something we would like to invest in from India, already have, in the self-serve space. So not enterprise, but self-serve. Yeah.
Interesting, very interesting. Akshay?
I think in the near term, at least, what I'm seeing is a lot of action happening on the enterprise side, both to Nikhil's point around software companies going out from India, and I think the other trend around actually even enterprise software adoption on the domestic side. I think if I look at our investments the last last year, have been predominantly, they have fit those two themes. I'd say the second area is just around content. I actually think this is the year of content, just given the push which Geo has, with the launch of Geo and so on. So I'm quite excited about that.
Okay, great. So now, uncomfortable question. Okay, so has the $1 billion dream seen a reality check this year, according to all of you? And if yes, what is a reality check? Or are you still gung-ho about every company being a $1 billion company, which is what we've been hearing and seeing for the past 10 years in India, I think. So, uncomfortable question, but yes, I'd like answers. Akshay, this time we start with you.
No, I think, at least from our experience, if they're India businesses solving India problems, right? I actually think there's, we've actually seen some exits fitting that theme as well, right? So we saw a company which went public last year, a company called Indian Energy Exchange, which is India's largest power trading exchange, right? Not typically a company which it's not a company which actually followed a model outside. And similarly in our portfolio, we're kind of seeing a lot of companies which are solving those core India problems starting to break out. So I'm actually more excited typically than I was, I'd say 3 to 4 years ago. The fundamentals have changed. There's just a bunch of things going on, whether it's Geo, whether it's payments, right, with UPI. Just a lot of enablers have come together now. So yeah.
Awesome. Nikhil?
I think personally, it's a matter of fund size, right? So I think companies exist across the spectrum. There will be some, every year there will be some $1 billion companies or potential of a $1 billion company which is being formed. And then there will be some which are, let's say, $500 million companies. There'll be some which are $100 million companies. And then there'll be some which are basically not VC investable at all, right? So all of those companies exist in the market out there. It's a question of what kind of a fund are you and what kind of a company do you want to invest in, which usually is simple VC math, right? And I think one of the panelists want to talk about that.
Yeah, so that's my next question.
Basically for our fund, which is $70 million total, right? We're more than happy with a $200 million outcome, right? Because that can easily make or break our fund and move the needle for our fund. Right. But if you talk to a fund which is $300-400 million, then for them, it needs to be a $1 billion outcome. Right. And only then it moves the needle, right? So yeah, it depends on who you're talking to, I think.
Atulya.
Well, I think it's true that exits haven't come as quickly or as much as one would have expected in the last 5 years, right? But there are green shoots. I think we've done a few exits in the last couple of years, and general ecosystem has seen a few exits. I think looking forward, we are more hopeful. Particularly, you see just a lot of smart strategic, smart money coming into the ecosystem. You see Tencent trying to put in a lot of money here. Walmart wants to buy assets here. So they're looking at something, right? That means that monetization is catching up. I think data users are there, data usage is there. I think where we are lacking is actually the monetization bit. And we're like much behind China if you look at things like GDP per capita and stuff like that. It's going to take time. I think it's going to be a slower sort of ramp up as compared to China, but we'll get there.
Oh, that's Pratik.
I think I agree with Nikhil here. Like it's really dependent on your fund size.
Okay.
Maybe to add to it, the other thing is like what to expect out of each sector, right? Because each sector has very different risk-reward ratio. Like if you look at content, like those are like really hit or miss.
Yeah.
Like if you hit something, you can create like a $10 billion company. But if you look at like SaaS or like IoT, like some of the earlier sectors, like here even like a 500 million outcome is pretty big because like it doesn't take that much capital to build that company.
Right.
So I think it's sector specific as well.
Okay. So coming back and taking from Nikhil's point, right? Let's talk exits, right? I think somewhere as entrepreneurs, we never think about exits when we go looking for funding mostly, right? So probably you all want to give your thoughts on a reality check on what you're looking for to raise and what kind of an exit you would be willing to give or looking to give an investor once you have that kind of investment you're looking at taking in. So I think that would I think be very relevant here because I think a lot of us would like to know if we took $1 million, what would we do with it and what would you look at and how many years as well, right? An X and a time for that X, right? So Pratik.
I think unfortunately, this particular topic, investors and entrepreneurs, I feel are on the other side.
Yes, absolutely,
right?
yeah.
Like for an entrepreneur, even if they raised $1 million and exited at $100 million, there's potentially like a life-changing outcome.
Right.
But for an investor, maybe not so, especially if it's a large fund.
Right.
So I think like when people start an idea or like get early feedback, they have to kind of decide which journey I'm on.
Okay.
Right? Am I going to be like super capital efficient or bootstrapped?
Right.
And like raise like little to no money and like get a good outcome. Like a friend of mine from business school just sold his like, it's a content farm, like for people who don't know, like it's they basically write a bunch of content. Then people come to their website, click through links, go to Amazon, get an affiliate fee. This guy sold his company for 110 million bootstrapped. And
wow.
he and I graduated out of business school at the same time, right? So, so it really depends on like the kind of business you build. And like as exits come, like there will be exits of all size.
Right.
Right. Not just like large ones, but like small or medium ones. So I think once you start, you have to decide which path I'm on. But if you do decide to be on the VC path, and there is no real reason why you should be, unless like the business really requires, then you have to have that kind of do the math. Otherwise,
right.
I'd suggest like take very little cash or not much at all.
Okay.
Until you have that clarity.
Fair point. Atulya?
I think Pratik has covered most of these things, right? So I would say that I think founders need to realize like we also have investors to return the money to, and there
it's not our own money.
Yeah.
It's not our own money, right? So as in some people might have their own money, but
I've had entrepreneurs ask that. Like you have so much money, why don't you give this little?
So we have a fiduciary duty to give back,
Right.
and we have promised certain returns in a certain timeline,
Right.
and that is just being sort of told to the founders. Right?
None of you are giving us real figures, are you? You're all being like so shy of the real figures. No, I'm going to ask the uncomfortable real figure questions.
I think Nikhil answers all the uncomfortable questions.
Why?
I think they have a much larger horizon than some of us, given your more corporate sort of VC.
Actually, we're not corporate. We are a typical LPGP structure. So we're not a corporate fund. We're an independent fund. We're $70 million in our second fund, total managing $120 million. But we invest across Asia, not just India. So I'm based in Singapore, and I look at anything outside of Japan for the fund. We're a Japanese fund. And then my partners, they look at Japan. And very frankly, it's a bit of a tussle internally. I'll be very frank and open here. So within our fund, we're a Japanese fund, started investing in Southeast Asia back in 2012, started investing in India back in 2016. Always, there's an allocation which is flexible. And I have to basically get money or get approval for increased allocation for this market, right? And the biggest question that comes to me is where are the exits, right? And sure, we are starting to see some of them, but I think still they're very far and few, and mostly driven by a few people at the top of the value chain, or at the top of the food chain, which is not a good thing, right? I think if you look at our portfolio in Japan, there's a clear horizon. As long as a company gets to break even, they can list like the next day. We've already, within the same fund, right? Like we've taken 3 companies public in Japan, and there are 2 or 3 more lined up out of the 45 total investments we made in Asia. Whereas in Southeast Asia, 0. In India, also 0. Right? Well, India has just started. But even in those companies, I still don't see that these companies can go public, or I'm not comfortable right now. Right? So I think that public markets and IPO as an exit path is still missing, and has started to change now.
It
right?
has,
So with New Gen, which is quasi-tech company, I would say, and same for the company you mentioned. It's starting to come, but I think the retail investor is still far away from understanding how to value a tech company properly, and justifying the valuation that us private investors are giving these tech companies. Yeah.
I'd probably add to Nikhil's point that I think we sort of feel the same way, and in fact that's typically how investors also construct their fund, right? So, and sort of the fund size. So to be completely transparent for us, generally when we do an investment, we're looking to return essentially our fund, right, at an exit, in an exit event. And if you sort of do the math backwards, I mean, depending on the business type, and you're trying to go towards a company which can inch towards like $500 million or greater, right, in terms of enterprise value. And so as a founder, what I would really think about is what are your aspirations around the scale of the business you're trying to build, right? I've seen some brilliant founders who they've built a high cash flow business, and quite happy just sort of keeping it at that scale. And there's that's actually a great way to go as well. But yeah, if you take venture money, then that's kind of at least what we would look for, right?
Okay. So Pratik, this is a question for you. Okay. So most of the SaaS enterprise startups are targeting global markets, right? So where is our, right to win India story? What would you tell me about that?
Sure. So like if you want to think about right to win, like first of all, why is that important, right?
Yeah.
So when you're competing in any market, like especially tech business will have, if not winner take all, winner take most kind of outcome.
Absolutely.
And so if you don't win that market, like it doesn't generate the return for your time or our money, right? And so it's very important to think about when you're starting out, just on a high level, like why should I be winning this market?
Sure.
And there are a few reasons why, like what that answer could look like. Like one could be like, this is the right time to start that business, right? And I'll talk more about that.
Yeah.
The second is like, structurally an Indian company should win this market, or like structurally our team should win this market, right? So there are 3 reasons that I can think of top of my mind. So in terms of why now, like what people have to appreciate is that like there are like 10,000 startups is on the board, but like
Absolutely.
to be very honest, like the world doesn't read 10,000 startups, like it's functioning just fine, right? So like it's just like once in a while for some technology change or a macroeconomic change, there is a reason why a new opportunity creates. Okay. And at that time, like so when the internet happened or mobile happened or cloud happened, or if blockchain will happen, then there is a reason why like now, whatever the infrastructure is of the world needs to like adapt to it.
Right.
And so there is a reason why a startup should exist, right?
Absolutely.
So that's one. Second thing is like why should an Indian company win? Like if I cover SaaS primarily, but so I can talk about that.
Yeah.
Like in SaaS, like essentially what you're doing is like there is a customer somewhere, like who has discovered this problem in their company, and like people from that company who have figured out a solution to that specific problem will go outside the company and create a company to help solve that problem for all the others, right?
Right.
And now, so whoever discovers the problem first will win, right? And so if Indian enterprises are not mature enough, where their org structure is not mature enough to kind of find these nuances, then it's very hard to build a case that, this problem will be solved by an Indian company. So like there has to be some other reason. For example, like you have to look about, like for example, milk, right? India is the largest or second largest milk producer in the world. Right. So you could argue that like whatever is to do with the milk supply chain, an Indian company or dairy will see this problem first.
Absolutely.
And so for that reason, maybe an Indian company has the right to win in that space. Similarly, like we invested in this company called Goodera recently, which makes software for CSR. And like India is a poor country, so a lot of the money for CSR is deployed in India. And so if there are problems in the deployment of CSR money, an Indian founder should be able to see it before the West. And so there is a reason why an Indian company might win. So to think really, really deep structurally about like why should an Indian company win? Or otherwise it's like I'm the best team, right? Like the third category. So there are companies already in that space. There's like Browser Stack, you could talk about, even Postman is like a very high quality company. So there is no reason why an Indian company would be winning, but it just happens that for some impossible reason, the founders had the vision or had the insight or the product chops to build it first. Right. So it has to be one of these reasons. Otherwise, it doesn't really make sense.
Right. Also, I think we have such a large population here. To start anything, our base is so huge, right? Especially in the sectors that you guys are talking about, that it should be easy for us to test, try better, and then make it much bigger very quickly because we have that market already readily available to us, right? That's
fair, but you have to understand there's like dollar-weighted market, right? So if you put dollar to all of that population, suddenly becomes a little bit smaller.
Very small, yeah. Okay, so that happens. Okay, Akshay and Atulya, questions for both of you. There's this whole, I'm not saying controversy yet, but there's a lot happening around the cryptocurrency, the blockchain, all of that. As investors, thoughts, what are Indian investors thinking about these sectors? Is it looking like it's going to happen? Does it interest you guys? Give me your candid thoughts.
I think the matter has been laid to rest yesterday. RBI has come out saying that they're going to stop all cryptocurrency activities, right? Immediately. So matter has been laid to rest. But for what it's worth, some of my thoughts. So I think there are a lot of nuances, but I think we have to distinguish between what is cryptocurrency and things like that, and what is fundamental infrastructure. That's blockchain, right? So, and we've invested in a blockchain company recently. I think our belief is that blockchain is really something disruptive and is going to affect a lot of industries and create value. Okay. And we are looking to take some early bets on it. Do we understand it completely? Do we know how it's going to play out? No. I think what our investment philosophy is to partner with some very smart people who have caught on the trend early and working on some interesting problems, and partner with them early and learn along the way. I think that's our lens. Okay. And hence we are going to take multiple bets in blockchain, in IoT, in all of these frontier sectors. Okay,
interesting.
And partner with people and learn along the way.
Nice, very nice.
I think I think it's important to distinguish the signal from the noise, right? So I probably agree to Atulya's point that I think we are also much more excited about blockchain. And sort of its potential applications. I think where we are in this whole crypto or blockchain wave is sort of similar to the mid-90s when the internet first came around, right? Where it wasn't, but if you think about even as the internet, like most of the value actually has been created, I'd say in the last 10 years, right? So I think it's space we're tracking very closely. We'll make some early investments. And then I also think that a number of even our existing portfolio companies will incorporate these technologies into their businesses as well. So we'll probably see a mix of those.
Interesting, very interesting. So any of you here, you know who to catch here. Okay, Nikhil, this one's for you. India being, our developers in India growing larger than they're growing in the US. Do you believe that we're monetizing well on our developing talent in India? What are your thoughts on that?
Yeah, so I think going back to where I initially talked about the sectors, right? So why I specifically mentioned global SaaS, at least as far as I've seen, I haven't seen too many companies being able to monetize SaaS properly in India.
Right.
And specifically for developers, right?
Right.
So we actually have a company in our portfolio called Hasura, which is right outside. With that company also, within the first couple of months, we discovered that we can try and monetize it here, but it's not going to happen.
It's not.
So the best way then forward is to make it a global SaaS company from day one and target the US market, as long as it's a self-serve model, right? Because if you start doing enterprise sales sitting out of India, trying to do it in the US, it's just a much more clunky way of building that company.
Right.
And then that's where the right of an Indian company winning in the US market becomes very difficult.
Right.
Whereas companies like Freshworks and Zoho have proven that as long as you have a good product, which potentially has a cost and pricing arbitrage sitting in India because the tech salaries here are so much cheaper, you can potentially build a global SaaS company sitting out of here.
India.
It's tricky, and the founders who are able to do it, they're very far and few, and they're usually crazy geniuses. And yeah, we have some examples of those.
All entrepreneurs were crazy geniuses.
They are. But I guess they need to be different crazy genius to be able to crack that global market. Yeah. And there are some brilliant companies being built in India now: BrowserStack, Postman, Freshworks already, Zoho already. Zoho is an amazing company, I think. Yeah, it's amazing how well they've built that company. Even though I'm not the best fan of the product. But I think still.
But you have to have respect for what has gotten built, right?
Yeah, I think they've, the kind of company they've been able to build, the kind of talent pool they've created internally, I think that's amazing. So developer platform, if anyone is trying to build that kind of a company here, I would suggest really that even though, yes, India is going to have its time, because Indian developers will overtake the American developers. Yeah. I don't know whether they will overtake the Chinese, not yet, I don't know.
Let's hope so.
But the number at least will be much higher than what it is in the US. So these companies potentially can waterfall back to India, but at least the first initial sort of market is going to be global rather than here.
Right. Okay. So quick question on, for investors sitting here, this is for all of you, and please feel free, whoever wants to answer this one is, has what you look at in terms of investing in a company, the metrics of that, have they changed over the years? Have you seen a shift in metrics that were there earlier to metrics that have moved now? From, let's say, how many subscriptions to, let's say, paying customers. Has that changed in some form or the other in terms of what you're looking at now as numbers versus what you were looking at earlier, right? And I know it could be sector specific, but there will be those 3-4 things that you would look at, let's say in a SaaS business or, in your developing businesses, where you would, has that changed or does that still remain the same?
I can go first. Well, I definitely think things have changed. I mean, if I think about, take something like e-commerce, 3-4 years ago, some of the startups and the kind of traction they would see at early stage versus today, right? I mean, there's a complete difference in scale. And I'm talking about at the earliest of stages, right? Which is typically where we invest. I think the decision-making around what metrics to invest behind has not really changed. We are typically a seed and Series A player. And so, what's more important for us is less the exact metrics, but more what the founders' interpretation of those metrics are, right? And what their insights are out of that. Because honestly, at seed, the business model changes, and I see the product, I've often seen the product completely changes, right? You're betting on the founder and the quality of the founding team.
Right.
So I think that fundamental has not changed.
You're right. That there's always backing a good team being the concept. Nikhil, thoughts?
So I think of course, there are standard metrics that everyone tracks, especially it's very sector specific. Also, what we say is, because we're investing very early, usually seed, pre-series A, these kind of rounds, we say there are hardly any substantial metrics at that point.
Right.
So what we're really looking for is customer love, right?
Nice.
That is what sort of overarching defines any metric, right? And then for a SaaS company, that customer love is shown by the engagement. Again, depends on what kind of SaaS company. If it's a system of record, then how many records are being created?
Right.
If it's a system of engagement, then what's the engagement?
Right.
But essentially, it's customer love, right? And in e-commerce company, it might look like something different, whereas in a SaaS company, it might look completely different.
Very different, yeah.
And I guess the only one difference I would say, which has changed since 2015, which I think has been talked about a lot already in many conferences and panels, is the top line versus bottom line, right?
Absolutely,
So, back in 2014, 15, that kind of time, it was just the top line which was being focused on. But now more and more, it's both top line and bottom line. So again, you can't just go back and say, hey, I'm building a profitable company. No, you need to show that growth also, and you need to show the big, massive opportunity also, especially if you're talking to a very large fund. And then, but you need to always keep a very close eye on the bottom line.
Absolutely. Nice. Atulya?
Not much to add, to be honest. I don't think, I think I've been here for the last 2.5 years. So in that time, actually, I think it's normalized, if anything. I think in 2015, it was like everyone knows, it was pretty crazy. People were investing large sums of money, and we made mistakes in a couple of instances as well.
Right.
I think now people are taking more time to sort of look at the business, look at some of the metrics.
Right.
But you ask any investor, you're not going to get what is the metric they're looking at, because that's really not the way we look at it at all.
Fair.
Right? As in, like they've touched upon, I think at seed, it's just more about the team and the vision.
Yeah.
At Series A, it's about whether there's some product market fit, as we call it, whether it's there. And at Series B, it's more about whether that product market fit is scalable and it can be monetized profitably. I think those are sort of subjective things we look at, and that depends. Really.
No, but those are good insights. Like team, customer love, and like you said, at what scale, what is the metric you're looking at? Very, very important for us to keep in mind as entrepreneurs. Pratik?
I think I'll just add something different. Yeah. So a lot of people, when talk about metrics like this, as soon as you emit the word, the first thing is numbers come into your mind, right? At least we, in the early stage, think of data instead of metrics, and data is not just quantitative, it's also qualitative. So we look at a lot of qualitative signals to see essentially what's the taste of the company, right? So I'll give you an example, again, coming back to SaaS, I know very little about investing. Sure. But so in SaaS, one thing we took up is, one thing we very carefully look for is who are your founding customers?
Right.
Right? So you can get customer love from 10 different kind of people, but we really, really care about who those are. Especially in SaaS, as I said, it's standardization of best practices.
Right.
So your early customers are sort of your secret co-founders.
Right.
So if you don't have the right for early customers, you'll build a good product for them, but they might not be representative of the larger market. True. So your taste really reflects in who are your early customers, how are you defining customer success.
Right.
So we look at a lot of these nuanced qualitative things to see the taste of the team.
Awesome. So I'm going to end this session with one last question to each one of you. Okay? That was the secret question. Okay. So what is your personal formula? What is the one thing that will make you say, I'm going to fund this company? All four of you. And that's personal. It's not from the fund space. I'm talking personally, since you guys do so much of this. But as a person, what is the one thing that will make you say, damn, I'm going to fund this company? We'll start with you.
I think there has to be inevitability about the idea.
Okay.
That like this idea is still going to happen. It's just a matter of who will do it. The world needs it. And if there is inevitability, then I get very excited.
Awesome. Atulya?
I think as investors, we are sort of founders. We call ourselves founders first. Essentially, we invest behind founders rather than markets or business models. I think all of that will be figured out. And even in founders, if I had to say one thing which really I care about is, I call it go through the wall intrinsics. Right?
Okay.
So as in the force of nature to go through anything to figure out.
Right.
I think that really gets me going.
Awesome. Nikhil?
Yeah, I'm going to twist the answer for this a bit. I don't know whether you like it. But I think for me, a very good criteria is whether if I cannot sleep because I'm thinking about this company almost like for the next few nights, right?
Yeah.
So, and that happens, by the way. It happened in all the investments I personally made, that I just could not sleep. Because the moment I woke up at 5 a.m., I'm thinking about that company and the problem and the solution. And when I sleep, I'm thinking about it. So that is sort of a qualifying criteria at the end, which tells me, this is it.
This is
what
what
sort
you're
of goes
going
back to what you said. Like it's like you're thinking about it so much that means you're really invested in it.
Right. Akshay?
I think for me, it's just, I typically gravitate towards founders who are just missionary, right? They're not, I mean, yes, the monetary part is one thing, but, just core passion and drive for what the space they're working on and the company which they're trying to build. It's very difficult to, I mean, it's more of a gut feel which you typically get, and it results in,
Sleepless nights.
Sleepless nights.
So not only entrepreneurs have sleepless nights, I think even investors have sleepless nights. So that's a good thing. And
Big
for entrepreneurs,
misconception about our lives.
No, but the good part is that we are able to give you sleepless nights too. We didn't know that till today. Now we know. Now we know.
A lot of times. It's multiplied by the portfolio size.
So now we know. And thank you so much. I think we've gotten great insights. We'll open this up for questions. Mohan, how much time and how many questions? 5 minutes, so that will be 2 to 3 questions at a max. So questions, please ask away.
This is a question more for Nikhil. So I've spent time both on the consumer side and on the enterprise side in India. I just wanted to know, are there any learnings for consumer startups in India from Southeast Asia? Because that's the sort of perspective that you have, which maybe others in the room don't have.
Sorry, the voice is not that clear, but any learnings for consumer startups?
Consumer tech startups in India from Southeast
Asia.
Yeah.
Actually, I think India is a bit more mature than some of the emerging markets in Southeast Asia, like Indonesia. But, they're always learning. Sometimes founders are onto a very good model in Southeast Asia, which actually has not been tried and tested in India. And I'm sort of lucky because I invest in both markets. I can see that. So yes, there are some, and we can talk about it offline. But if you have to look at a particular market, I would say look at Indonesia. It's a market which is very similar and comparable to India, and sort of at the same level of maturity also. Yeah.
Cool. Thank you.
Hi. This question is for Pratik. I do want to know what is the criteria that you look for to invest in healthcare. As an investor, what is the criteria that you are looking out for to invest in healthcare startups?
In healthcare startups?
Yes,
in
please.
healthcare startups.
I don't really cover healthcare, but I don't know if anybody wants. Okay. You want to take that? So if from first principles, I would just want to see who are the different stakeholders that your business will interface with. What is it about their life that is not ideal, and how can you substantially improve that? So that will be the business value prop, and then why is this team the right team to do this?
Okay. Hello. Yeah. I just want to add with this blockchain thing that you answered. Yesterday, RBI has said that they want to stop this thing, but
You'll have to speak up. We can't hear you. It's on,
Hello?
but little louder. Yeah.
Yeah. So yesterday, RBI said that this blockchain in cryptocurrency, they want to put it down. But Indian state, this Andhra Pradesh, they have implemented blockchain-based solutions for government transactions. So how the user should take it?
Okay. So I think those are two different things. I think what RBI has come down on is cryptocurrency trading because the currency is just so volatile and they don't want retail investors to lose their money. And it could be potentially used for laundering and various other activities as well, though there are KYC things. So that's very different from using blockchain for various other things, other enterprise solutions or other government solutions. I don't know what exactly Andhra Pradesh government is using it for, but there are various other applications for blockchain, and that is like any other distributed architecture, right? So there's no issue with that.